Most people, since Gaddafi was deposed, expected Libya to be stable, and in fact, their production has been resilient. Not anywhere close to where it was before he was removed, but there's basically two different governments competing with 9 different militias, and so there's been a lot of volatility to that production. And recently, there's been port closures, and about 80% of their flows have been affected. Literally 800,000 a day of about what's been 1 million barrels a day of production. This is a loss of output coming at a time when there's other supply issues, and going, of course, into the second half of the year when inventories are expected to draw up pretty meaningfully to begin with.
You know, when we were at OPEC, we asked on camera the Libyan oil minister. I see they were down about 400,000 at the time, and I stuck the camera in his face and I said, "Where are you at?" And he said, "We're going to be back up and running in a couple of days." Literally what he told us to the camera. Obviously, that's not the case, which leads me to think, Mike, they don't have any handle on what's happening over there.
Yeah, it's kind of the equivalent of locking a bunch of 16-year-olds in a room with brown liquor and loaded weapons and saying, "I'm going to leave and go to the movies," and somehow thinking it's going to be okay. And for us, people who are looking at the oil balance, when you typically have an outage, you might not be that worried about it. Let's say if this was 20 years ago or 25 years ago. The problem is that the ability to make up for these types of disruptions is very limited. I mean, this is the background issue, and part of, I think, the frustration behind the president's tweet to OPEC. Their ability to, so to speak, dump oil into the market is really limited. It's only 3 countries that can do it, about 1 million barrels a day. So Libya going down, Venezuela having its problems, issues in Nigeria, the Syncrude outage in Canada. I mean, this is literally all hitting the market at a time when the ability to offset those losses is extremely limited.
It is, and you're making a very important point. And I don't know if you heard our piece right at the top of the show where we walked through. I understand the optics. The president has to say to the American people, "I'm trying to bring gasoline prices down." They hit everybody, especially the lower income Americans, proportionally harder. However, we also need to make it clear, and it sounds like what you're saying is this, that OPEC also has a deal. They simply cannot, Saudis cannot go out and raise output on their own without effectively breaking that deal, can they? I mean, that would tick off Iran even more at a time when the political tension between those two longtime enemies is starting to heat up.
Yeah, so there's 2 moving parts of that. The OPEC deal itself, which you're correct in identifying, and then there's the ability to push that oil out. This is, again, it's not like after Iraq invaded Kuwait and you were able to make up over 4 million barrels a day of lost supplies within 5 weeks. I mean, literally, that's a dot of time in the chain. This is a little bit different. There's the deal itself, and then, of course, there's just the ability. And at this point, the notion that the Saudis are going to be able to push 2 million barrels a day of additional supply to the market is fiction. The single highest monthly number they have ever produced, ever, is only about 650,000 a day above what they were recently doing. So that's really, to me, the big issue. The deal is kind of secondary because you do have a number of countries facing problems.
Yeah, and also maybe, Mike, the Saudis are perfectly fine with $75 oil.
The Saudis at the recent OPEC meeting, if you really were able to dig down into it, had no intention of doing anything to push down the price of crude. Their goal, if you look at their budget, is to get the price of oil in the high 80s to the mid 90s. And their minister, Khalid, actually made that pretty apparent 18 months ago when they instituted the cuts back in November. That was their goal. They didn't give a price target, they gave an inventory target. And that inventory target equates to a price in the $88 to $96 range. There was no change at the recent OPEC meeting about that goal. And so that's kind of lost on people. They wanted to make the deal look like it would help assuage those concerns of consumers, but they didn't want to do anything that actually pushed the price of oil down. So I don't know that subtlety really came across, but that was, to me, the obvious issue at the joke. There was a very big difference between what you would call the paper barrels and the real barrels, and whether those would be enough to actually dampen the price of crude, which for us, obviously, that was not going to be the case. They had no interest in doing that.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.